Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CRAWFORD CO quarterly report. Crawford & Company offers a wide range of businesses and services to its clients across various regions. These include claims management services for property, public liability, automobile liability, and marine insurances, field investigation and evaluation of property and casualty insurance, claims workers' compensation, liability, and property claims management, death and dismemberment, business travel, life, disability, critical illness and credit protection claims programs, short and long-term disability, Family Medical Leave Act, Americans with Disabilities Act, and state leave claims, legal services, and risk management information, loss mitigation services, such as medical bill review, medical case management, and vocational rehabilitation, managed repair service, and outsourced contractor management for insurance carriers, subrogation claims management, recovery, and consultative services, staff augmentation, with temporary staffing resources, administration of loss funds, to pay claims. These services cater to various industries, including insurance carriers, brokers, corporations, and self-insured entities. Crawford & Co. stock price stability. A year in review. Over the past year, Crawford & Co.'s stock price has remained relatively stable, experiencing a minor decrease of -2.51%. This stability can be attributed to several key factors. The company's quarterly earnings reports presented mixed results, with some segments performing well while others faced challenges. However, these balanced reports likely contributed to a stable investor reaction. Regular dividend declarations and share repurchase authorizations also played a role in maintaining the stock price. These consistent shareholder returns and capital management strategies are generally expected and do not typically lead to dramatic fluctuations unless there are unexpected changes. Additionally, corporate announcements and investor engagements were routine and standard for publicly traded companies. The market likely anticipated these developments or found the combined impact of positive and negative factors to be neutral within the specified range. As a result, Crawford & Co.'s stock price remained stable throughout the year. The primary drivers of revenue growth or decline across various segments are multifaceted. In the North America loss adjusting segment, improved staff utilization and increased unit volume contributed to revenue growth. Conversely, the international operations segment experienced revenue growth due to higher value third-party administration revenues in the UK, expansion of Spanish business, and increased claims related to natural disasters. However, a common theme across segments is the impact of changes in case volumes and product mix on revenue. The Platform Solutions segment saw revenue decline due to decreased staff augmentation services and low-value inspection cases. Meanwhile, the Broadspire segment experienced growth driven by increased claims and medical management revenues. Overall, the primary drivers of revenue growth or decline are largely segment-specific, with common themes including changes in staff utilization, case volumes, and product mix. Net income and profit margins experienced significant changes between 2024 and 2025. Net income increased by 32%, from $9,387 million to $12,389 million, and also saw a 30.4% increase from $20,668 to $26,949. Profit margins improved as well, with gross margin increasing from 27.9% to 28.6%. Operating margin rose by 32%, from 8% to 10.1%. Segment profit margins also showed improvement, particularly in the North America segment, which saw a significant increase from 6.3% to 9.1%. The Broadspire segment's operating earnings as a percentage of revenues before reimbursements increased from 14.9% to 15.1%. However, the international segment remained unchanged at 6.6%. The gross profit margin and operating margin for the 3 months ended September 30, 2025, showed mixed results, with some segments experiencing an increase while others saw a decrease. Overall, these changes indicate a positive trend in net income and profit margins, driven by improvements in various segments. The company is generating positive operating cash flow, as evident from its net cash provided by operating activities. In 2025, this figure stood at $51,715 and $11,093 in 2024. Furthermore, a closer look at the 9-month period ending September 30, 2025, reveals that cash provided by operating activities reached $51.7 million. These numbers demonstrate a significant increase in the company's ability to generate cash from its core operations, indicating a positive trend in its financial performance. The company's debt level or interest expenses have undergone significant changes over time. A notable trend is the consistent decrease in corporate interest expense and interest paid. Specifically, corporate interest expense decreased by 19% from $4,682 to $3,788 on page 2, and by $1,944 from $12,534 to $10,590 on page 3. Additionally, interest paid decreased by 5% from $14,244 to $13,504 on page 7. Furthermore, the net corporate interest expense also showed a substantial decrease, with a 100% reduction from $12,534 to $0 on page 25. This trend continued in subsequent periods, with a decrease of $1.5 million for the 3 months ended Sept 30, 2025, and by $1.1 million for the 9 months ended Sept 30, 2025 on page 47. Overall, these changes indicate that the company has successfully reduced its debt level or interest expenses over time, resulting in significant cost savings. The company's financial performance varied across different segments and regions. Notably, North America loss adjusting and broadspur segments saw an increase in revenue and cases, while the international operations segment in Europe, Asia, and the UK also experienced a rise in revenues. In contrast, several segments and regions underperformed. The Platform Solutions segment suffered from decreased revenue and cases, while the International Operations segment in Latin America faced similar issues. Within North America loss adjusting, the U.S. field operations saw a decline in revenue. Additionally, Contractor Connection and Networks exhibited poor performance, with significant variances in their revenues over 3 months. Overall, the company's financial results were mixed, with some segments and regions performing well while others struggled. Management is signaling a cautious optimism about the company's outlook and strategy, despite weather activity and macroeconomic uncertainties affecting recent operating results. They are focused on growing revenues and reducing expenses. Key priorities include improving claims and medical management revenues at Broadspire, allocating indirect costs based on usage, and prioritizing dividend payments based on current and projected earnings and cash flows. The company is also working to manage defined benefit pension plan contributions and comply with financial covenants in financing agreements. Overall, management strategy emphasizes strategic planning, resource allocation, and evaluating segment performance to drive future growth and profitability. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In recent years, it has consistently paid out significant amounts in dividends, totaling over $21 million in just 2 periods. Additionally, the company has also engaged in share buybacks, repurchasing shares worth millions of dollars. This demonstrates a commitment to returning value to its investors and maintaining a strong financial position. That concludes the financial summary for CRAWFORD CO. Feel free to comment below, and I will be happy to answer them when possible.